Hi, this is Tom Hoskins for Mining Journal Select. I'm here with John Cash, who's the CEO of Energy, which is a Toronto-listed uranium miner with a portfolio of assets, low-cost projects across Wyoming. Hi, John. How's it going?
Hey, doing really well, Tom. How about you?
Yeah, good. Just bringing in the new year in style in London here. As a company, you're a producer already. You've got output of 2.7 million pounds to date. Tell us a little bit more about your energy and its operations.
Yeah, we're a publicly traded uranium mining company. We are Wyoming centric, and we also utilize the in situ technique to recover uranium. We've got two flagship properties, the first being Lost Creek. And as you mentioned, we've already produced 2.7 million pounds from that facility. And we've announced a decision that we're ramping production up. And we also have a second flagship property that we have all the major permits for. And we're moving closer and closer, I believe, to a decision to build that out and ramp it up. But that's called Shirley Basin. So those are our two flagship properties. We also have a number of exploration properties around Wyoming as well.
Okay, so just starting with Lost Creek for a minute, you mentioned you've taken the decision to ramp up production. Tell us a little bit about your company's contract book and what production rates we'll look at in the coming years.
Yeah, and really it's contracting that was the basis of our decision to ramp production back up. But over the last few months, we've been successful at bringing in 600,000 pounds into our contract book. Deliveries will start this year, and we'll get up to the 600,000 pound year rate on our contract book and production next year. But those are long-term contracts with well-established companies in the nuclear fuel cycle. And so they give us the security that we wanted and that we desired as a fairly conservatively run company to be able to pull the trigger on Lost Creek and ramp that production back up. So we are hiring right now, bringing additional drill rigs out to the site and ramping up production. And that ramp up will happen very quickly because we are a fully operational facility to begin with. So it's going to happen pretty quick.
Okay, and let's talk about challenges for a minute. Do you see anything on the manpower or material side, shortages-wise, that could be a problem ramping up production?
Yeah, I'll start with the materials side. On that particular side, we're not seeing any issues. Certainly, there are some very long lead times, but we've been aware of that. We've had a long-term purchasing program ongoing now for well over a year, so we are well ahead of the game there. Electrical supplies and monitoring supplies, equipment, those are the two areas where the lead times are the longest. We're seeing anywhere from 12, sometimes even up to 18 months to be able to get that equipment. But that's okay. We're ahead of the game there. We've been making purchases for quite some time. And beyond that, we have header houses that we've already mined through. And so we can move those header houses around as needed with their equipment in it. So we're in good shape there. Manpower is more challenging for us. So we've been successful at hiring. We continue to bring people on. In fact, we'll have two more starting this week. And so we're having success. But I think like everybody in the commodities and other industries, it takes a lot more effort to go out and make those hires. So we're finding the people we need. We're bringing them on, but it's taking a lot of effort to go out and find those people. Right now, we're not seeing that it's going to interfere with production. But it is something we're monitoring very carefully and trying to stay ahead of.
Okay, understood. Thanks, John. And let's move to the financial side of the business. What's your cash position looking like at the moment?
Yeah, last quarter, we reported a little over $37 million in cash, which is a great position for us to be in. Beyond that, we also have an inventory of 324,000 pounds. Just a couple of weeks ago, we did announce that the Department of Energy is purchasing 100,000 of those pounds at a very good price, over $64 a pound. And so we'll be transferring those pounds over to the Department of Energy here in the coming days and be able to bring some of that cash home into the company. So we're in a good position there. And ramping up Lost Creek, we're in a good spot to do that. Got a good cash on hand to get up very deep into that ramp up, get into those contracts and sell additional pounds. And the spot market's been recovering the last few days. So it's not our intent to sell the remaining inventory into the spot. However, if the spot market does continue to improve, maybe we'll take advantage of that as well. So we're very happy with where we are right now in the cash position.
Okay, understood. And just moving on to buzzword of the moment, sustainability. Your company's shown itself to be a leader in that field in recent times. Tell us about those past successes and what we can expect to see from you in the future.
Yeah, research and development goes hand in hand with sustainability, looking for ways to improve operations, to do things better, and at the same time driving down cost. And we've had a number of successes in the company over the years with methodologies for abandoning wells, with regulatory and permitting techniques that had not been used in the past. We've had great success there. Wastewater treatment. We are having good success there, have had good success, and we believe we'll continue to have good success there. We've announced an additional research and development program there to further reduce the amount of wastewater that we generate. And we're hopeful to get down to literally a few GPM of wastewater created. Beyond that, we're also working on a methodology for a new well casing and well installation method. We've announced that we've completed phase 1 on that. So we've been very successful at installing those wells. We're seeing a dramatic decrease in the amount of drill rig time. We've gone from 3.5 days of rig time per well, injection well, down to about a half a day of time per injection well. So that's a fairly dramatic cost savings. We're moving now on to phase 2. We need to prove out the injection rates on those wells, and that's ongoing. It'll be a few months before we complete that work, but we are very optimistic we're going to be successful there. Having said that, research and development is challenging, and so we'll have to wait and see what the results are. But sustainability is important to our company, and important to our state here in Wyoming, and we're going to continue to look for ways to do it better and to do it cheaper.
Understood. Thanks, John. Now let's just take a step back and look at the uranium industry more broadly. There's been a significant impact, obviously, by Russia's invasion of Ukraine. That's been important in the past year, and we've seen prices finally start to move after a decade or so. How do you see the uranium market evolving in response to global geopolitics?
Yeah, we can't underplay Russia, Ukraine in that situation. Russia is a major refiner, not miner, but a refiner of uranium through conversion and enrichment services. And what we're seeing in the market is the Western world nuclear power companies are trying their best to move away from Russia. And that's putting a lot of pressure on the Western converters and enrichers. Prices for those services are very high right now. Conversion looks like is really the pinch point. But I think that's going to follow through with enrichment as well. And we're beginning to hear and appreciate more and more that enrichers will be moving toward a process called overfeeding, which will require them to purchase or have more UF6 feedstock and more yellow cake to feed into that process. In fact, I saw a report that just came out yesterday from Cantor that they're estimating that could be on the order of 20 million pounds of additional U3O8 per year, which is a tremendous additional demand on the production sector, the mining sector. So yeah, it's hard to overestimate what the impact of Russia could have, both in the short term and the long term, and the pricing for not only uranium mining, but the refining services going forward. And we stand ready at Lost Creek. We stand ready to ramp up production even more and to build out Shirley Basin to be able to feed into that as market prices go higher and as we sign additional contracts.
Okay, John. Well, yeah, it's been fascinating getting your insights. I'm afraid that's all we've got time for today. So all that remains is for me to thank you very much indeed for joining us.
All right. Thank you. It's been good talking with you.
Great. Thank you, John. And that concludes this video for Mining Journal Select. Goodbye.